Master the art of buying the bottom. Crypto success strategies for the uncertain market. Are you tired of riding the waves of crypto market chaos without a clear plan? What if you had a proven strategy to turn uncertainty into profit? Today, we'll dive deep into the smartest ways to buy at the bottom and thrive in the unpredictable world of crypto investing. The crypto market's wild volatility isn't scary, it's an opportunity. Investors who understand market dynamics and liquidity trends are poised to make the most gains. Stick with us as we simplify complex strategies and set you up for long-term success. Buying at the bottom isn't just a buzzword, it's the cornerstone of maximizing profits. The idea is simple: buy assets when prices are low, hold during growth phases, and sell at the peak. But here's the hard truth: identifying the bottom isn't always easy. Many investors get trapped in emotional decisions, either selling during panic or chasing price spikes out of FOMO. Smart investors focus on patterns and build their positions when the market dips. This patience and timing are what make buying the bottom a truly superior strategy. Wondering how to tell when prices are at their lowest? Look for these reliable indicators. Oversold conditions in charts, RSI below 30. 2. Negative news hitting its peak. 3. Dropping volume but steady pricing, hinting at consolidation. These signs reveal that the panic is subsiding and accumulation is quietly happening. Pair these observations with market analysis to gauge when it's time to act. Remember, this isn't about rushing in. It's about informed, confident decisions. Unsure about where the market's headed? Here's your power play: dollar cost averaging, DCA. This simple method involves spreading your investments over time by buying assets regularly, regardless of the price. Why gamble on timing the market when you can reduce your risk with consistency? Combine DCA with a diversified portfolio. Don't put all your eggs in one digital basket. Explore different sectors, DeFi, gaming tokens, or Layer 2 solutions, and balance your risk across the board. Even uncertain markets hold hidden gems if you remain calculated and adaptive. Let's talk liquidity, the lifeline of the crypto market. When liquidity flows increase, prices tend to rise. Analysts predict an upswing in liquidity in the coming months, with institutional investors entering and market conditions stabilizing. This is great news for keen-eyed investors like you. Prepare by identifying coins with strong fundamentals and active ecosystems. These assets are well-positioned to gain traction during market recoveries. Building your positions now, while the market consolidates, can set you up for impressive returns in the months ahead. Even the smartest strategy can fail if emotions take over. Fear and greed dominate the market, but as a disciplined investor, your goal is to block out the noise. Make data-driven decisions and ignore sensational headlines designed to fuel impulsive reactions and doubt. Create a clear investment plan. Set objectives for entry and exit points, and most importantly, stick to them. Don't let uncertainty derail a well-thought-out strategy. Emotional control is what separates profit makers from regretful investors. The crypto market is alive with potential, but only for those ready to take action. Buying at the bottom, backed by a sound plan in uncertain times, is where fortunes are built. The strategies we've shared equip you with the tools to navigate confidently and capitalize on the upcoming liquidity surge. Don't stay on the sidelines while others make their moves. Like this video, subscribe to our channel, and hit the notification bell for more game-changing tips. Share your thoughts in the comments. What strategy will you use in the upcoming market shift? Take charge of your crypto journey. Start today.